Brickwork Ratings presents BWR Drishtikone for August 2022. BWR Drishtikone brings you custom insights, principal views of economists, well-informed researchers and industry stalwarts. Let's hear the views of Dr. M. Govinda Rao, the Chief Economic Advisor of Brickwork Ratings. Let's glance at the trends of macroeconomic indicators and the views of Brickwork Ratings. The domestic growth prospects continue to impinge by adverse global developments such as prolonged Russia-Ukraine war, tightening financial conditions, and rising global recession risk. To bring down inflation, the RBI has already increased the policy repo rate by 140 bps since 4th May 2022, in addition to absorbing excess liquidity in the system. With the increase in the rate cycle, we expect CPI inflation to possibly ease below 6% during H2 FY23, yet it may remain elevated above the upper band of the target in Q2 FY23. Due to frequent forex market interventions, forex reserves depleted sharply, and the import cover of India's foreign exchange reserves fell to 8.7 months in end July 2022. After showing a remarkable increase in FY22 despite weak global demand, the pace of growth in Indian merchandise exports have come down, and the recent ban on the exports of certain commodities such as steel to cool down inflation may further dampen exports. The various rate rationalization measures taken by the GST Council to correct the inverted duty structure have helped improve revenue. The generation of e-way bills has led to significant improvement in compliance. GST collections may continue to be higher in the coming months. Let's now have a look at the sectoral indicators. The repo rate hike is expected to result in higher lending and deposit rates, meaning higher EMIs for housing and vehicle loans. Banks were concerned that NARCL have been quoting low amounts for the purchase of NPAs in the region of 2 to 3 of the outstanding. The automobile sector has been witnessing a gradual improvement in month-on-month and year-on-year sales for most segments, buoyed by the model launches, better availability of semiconductors, and the softening of commodity prices. Electricity Bill Amendment 2022 expected to nudge existing discoms in the right direction. Renewable power sector to benefit from greater government-mandated consumption requirements over the long term. Steel prices continue to remain volatile and under pressure in the near term. Demand expected to remain steady, pressure on margins to continue. Larger players are also investing to scale up their capacity to accommodate rising demand. Lastly, let's have a view at the debt market indicators. Short-term bond yields spike post repo rate rise. As forecasted by BWR, the hike in policy rates by the RBI to combat inflation has led to an elevation in bond yields and all the benchmark lending rates or repo-linked lending rates for the retail and corporate loans of lenders. In BWR's opinion, in spite of geopolitical disturbances, demand for ECBs is expected to rise on account of higher interest rate differentials on the back of rising interest rates in India. For detailed analysis and BWR views, the report is available in the research section of BWR website. If you like the content, please like, share and subscribe to Brickwork Ratings channel for more updates.